While we're waiting for gold to give us this daily or intermediate cycle low, let's have a look at fundamental value of some of the most well-known, most popular gold miners. Today, we're going to have a look at Kinross and Alamos Gold as a result of their Q2 financial reports. But remember that from day to day or even from week to week volatility, the actual share price might be somewhat different from your fundamental valuation. The way we look at the valuation here is basically we look at the discounted per share value after all-in sustaining costs, after long-term debts and taxes. So the factors that we do look at is the gold and silver prices, the amounts of reserves and resources in the ground, after cost of extracting those resources, after long-term debts and after taxes. Clearly, we look at per share value, discounted at a discount rate of 5% in this case, with a bit of a secret sauce on insider shares, which are important as larger insider holdings helps to align the incentives of the managers with those of the shareholders. And coming back to gold price itself, as usual, we're going to have a look at three scenarios. Our balanced scenario plugs in the gold price of $1,900 per ounce, conservative scenario $1,600 per ounce, and optimistic scenario $2,200 per ounce. As you see, our optimistic scenario is not outlandishly optimistic. Personally, I do believe there is a good chance of gold price going beyond that number, perhaps far beyond 2200, perhaps over the next couple of years, as the Fed is likely to eventually pivot. Now, starting with the reserves and resources, we'll look at proven and probable reserves of gold and silver, as well as measured and indicated resources. That's exclusive resources, meaning that those are in addition to the proven and probable reserves. And in our valuation model, we don't include any of the inferred resources, never mind any of potential exploration success in the future. So looking at the reserves and resources of gold, we see that generally Kinross has about 2 to 3 times more gold in the ground than Alamos Gold. And looking at silver, their resources and reserves in the ground are somewhat comparable. And MOZ on this slide stands for millions of ounces. Next, looking at all-in sustaining costs, long-term debts and taxes, we see that generally Kinross is more of a leverage play versus gold price, as their costs of extraction, their all-in sustaining costs are higher at about $1,320 per ounce versus $1,150 per ounce for Alamos Gold. This means that as gold price increases, the margin for Kinross will grow faster in percentage terms, hence giving you slightly more leverage versus gold price. Plus, we have a relatively large debt with Kinross at nearly $2 billion. And with no debt in case of Alamos, clearly again Kinross is more of a leverage play, whereas Alamos might turn out to be slightly less volatile with gold price. Looking at shares outstanding and discounting, Kinross has 1.23 billion shares outstanding versus 395 million shares in case of Alamos Gold. Both have 0.28% of the shares outstanding in insider hands. And the numbers for average mine life. So the interesting question in terms of mine life here is, do you want to have a larger number? In that case, it means that resources seem to be large relative to production. Or does it mean that production is rather small? And discounting over longer mine life means that the resulting present value will generally be smaller for a given discount rate. In this case, we're going to use a discount rate of 5%. Let me know down in the comments below if you would use a different discount rate. So once we plug in all these numbers into our valuation model, we get 3 numbers for our 3 scenarios, starting with the conservative valuation, where we'll plug in the gold price of only $1,600 and we'll look at only proven and probable reserves in the ground, without taking into account any of the measured and indicated resources, never mind inferred resources or any future exploration success. So this is truly a conservative scenario where we have Kinross valued at only $2.28 and Alamos Gold at slightly over 5.5 cents per share. Next, let's have a look at the balanced scenario where we plug in the gold price of $1,900. But even in the balanced scenario, we only look at the proven and probable reserves in the ground. Again, without considering any of the M&I resources, inferred resources, or any potential further exploration success. So even in our balanced scenario, we are leaning quite a lot towards the conservative valuation. And in this scenario, the valuation is $5.66 for Kinross and $9.21 for Alamos Gold. Usually our balanced valuation is perhaps closest to the market price. And while Kinross is under $5 right now, it was around our balanced valuation somewhere near the beginning of this year, whereas Alamos Gold is currently over $11. Again, as I mentioned, our valuation does lean a lot towards being conservative. We don't include any of such recent news on potential future exploration success. One example here from just about a week ago, we see that there are some drill results with interesting gold mineralization beyond the reported reserves and resources numbers. And finally, most excitingly, moving on to the optimistic valuation. Let's plug in the gold price of $2,200 per ounce. And in this case, we're going to value proven and probable reserves as well as only half of measured and indicated resources. Again, even in our optimistic scenario, we are far from outlandishly optimistic and still lean somewhat conservative, in which case Kinross is valued at slightly over $12.50 and Alamos Gold is valued slightly over $14.10. These two are of course established miners which might not have as much torque to higher gold price as some of the junior metals we discuss at myfinanceteacher.org. So make sure to join us before gold price finally breaks to new all-time highs. Have a wonderful Wednesday. Bye-bye.